Hi guys, my name is Sebonga from Millionaire's Journey. We are continuing with the trading course. Yesterday we learned about currency pairs. What is currency pair? Types of currency pairs, the most traded pairs. We also covered when to take a break from forex and when to start trading forex. How do you know when you are ready to start forex? Let's say you have been studying. So today we are continuing. We will be talking about trading sessions. The best pairs to trade on that trading session, and then we'll also cover the types of traders, because different people trade different things and we all prefer different methods and things. We don't like doing things the same. Everyone is different. So let's continue. So trading sessions. Talking about trading sessions. The forex market is open 24 hours a day, but that doesn't mean it's always active or it's always active the entire day. So I'm sure you've heard that forex is 24 hours a day, but that doesn't mean the price is always moving that 24 hours. It's always going up and down. There are moments where the market is quiet, it's not moving, or it's moving slowly. There's not much trading opportunities. You can make money trading when the market moves up, and you can even make money when the market moves down. So the only time you make money in forex is when the market goes up and when the market goes down. It's hard to make money when the market is just not moving, it's not going up and it's not going down. And there are moments where the market is not going up and it's not going down, it's just moving, it's consolidating. There are 3 major trading sessions which complete the 24 hours. So there are 3 sessions which cover the 24 hours. So when one session opens, the other closes. When the other session closes, the other opens. Sometimes they overlap. When they overlap, the other session opening before the other session close, so 2 sessions are active. So that's how the 24 hours is covered. 3 sessions. When the other close, the other open. When the other close, the other open. And the 3 major trading sessions are the London session, the US session, and the Asian session. So we have the London, we have the US, we have the Asian. These are the 3 sessions that covers the 24-hour trading. So for the 24-hour trading, we need 3 different sessions. Let's talk more about these sessions. So let's talk about the London session. What's happening on the London session? The London session crosses with the 2 other major trading sessions. Large chunk of transaction take place during London session. So a lot of tradings take place during the London sessions. Most traders are trading the London session. The market is moving, the market is going up, it's going down. There are a lot of trading opportunities. So large of chunk trading session take place during this time. This leads to high liquidity and potential lower transaction costs, e.g. lower spread and lower pip spread. So if there are more people active on the chart, the brokers tend to make the spread lower, so the transaction cost is lower because a lot of people are trading. High liquidity means A lot of people are trading. The market is moving. There is money. It's going up. It's going down. There are trading opportunities. Some are losing money as usual. There are people who lose money. Sometimes we lose too. So this leads to high liquidity and potential lower transaction cost, lower pip spread. London trading session is normally the most volatile session. So the London session is normally the session that moves most. That's what this sentence means. The London session moves most. That's where the market is more active on the London session. Most trends begin during the London session. So most of the trends, if you hear someone talking about uptrend, short trend, uptrend and downtrend, most of these trends begin during the London session. So this means the London session is active. The market is moving. Volatility tends to die down in the middle of the session. So when the session opens, the market moves. Then when it's in the middle or towards closing, the volatility or the liquidity tends to die down and it becomes calm. Trends can sometimes reverse at the end of the London session. So as I said here that most trends begin during the London session. Also, the trend can reverse at the end of the London session. So let's say the London session opens and the market moves to an uptrend. It can also reverse and just change to a downtrend at the end of the London session. So this is what's going on during the London session. Now let's talk about the New York session. During the New York session, there is high liquidity during the morning. So there is high liquidity during the New York session. Most economic reports are released near the start of the New York session. So during the New York session, also the market moves because there is high liquidity and most economic reports are released near the start of the New York session. 85% of all trades involve the dollar. As you saw yesterday, most of trades involve the USD. Most of the trades involve the USD. So it's likely to move because most pairs involve the USD. Whenever big time US economic data is released, it has the potential to move the market. So US economic data has potential to move the market during the New York session. Liquidity, volatility tend to die down during the afternoon of the US session. The same as the London session. Liquidity tends to die down during the afternoon of the New York session. So this is what is happening. So the London session moves big time. It's active, it moves a lot. Then the New York session moves, but not as much as the London session, but it also moves the market. Okay, now let's talk about the Asian session. The main market participants during the Tokyo or Asian sessions are commercial companies and central banks. So during this session, the main members or the main traders during this session are commercial companies and central banks. there are few transactions taking place on a daily basis. So on the Asian session, unlike the New York and the London session, there are few trading transactions. Liquidity can sometimes be very thin. So the other two sessions have high liquidity and they move, they are volatile. This one, the Asian session, liquidity can be very thin. This is the time where the market is not moving, or it's moving slowly. There are no big movements and there are less chances of making money. There will be times when trading during this period moves slow. You see, so during this trading session, there will be times where the market moves slow. During those times of thin liquidity, most pairs may stick within a range. So instead of a pair doing this, during the London session, it can do this. During the Asian session, the market can move like this, while during the London, it moves like this. So that's the difference between the New York, the London, and the Asian session. This provides opportunities for short day traders or potential breakout traders later in the day. So while the market is not moving, it is giving the day traders or the breakout traders a chance or to wait for the market. Let's say the market is moving like this. The breakout traders are waiting for London to open so that the market can do this, then they start trading. They are just waiting patiently for the market to break so that they start trading. So this is what it means when we say this provides opportunities for short day traders or potential breakout traders. Most of the action takes place early in the sessions when there's more economic data. So there is more economic data when the session opens, but few moments later the sessions just keep quiet. It stops moving or it moves slow. Move in the Asian session could set the tone for the best of the day. So moves here can give experienced traders good trading opportunities for the rest of the day when the other trading sessions open. Traders later in the session will look at what happened during the Asian session. You see, it gives opportunities to help organize and evaluate what strategies to take in the other sessions. So you can basically analyze during the Asian session and then enter trades during the New York session and the London session. After big moves in the New York session, you may see consolidation during Tokyo or Asian session. So these are the big moves, and this is consolidation. You can make money with this kind of moves. It's hard to make money with this kind of moves, with this kind of a move. So basically the Asian session doesn't move that much. So let's continue and see which are the best pairs to trade during these sessions. Let's start with the Asian session. What currency pairs are best to trade during this session? Some people can trade while the market is moving slow. The best currencies to trade during Tokyo session will depend on the individual trader and the strategy employed. So if you want to trade this session, it will depend on yourself and the strategy that you'll be using and the country that you are in. Traders looking for volatility will tend to trade Japanese yen, Singapore dollar, Australian dollar, and New Zealand dollar. So if you want high volatility during the Asian session, you can look at this pairs, but sometimes they're not moving. But you can look at the Japanese yen, the Australian dollar, the Singapore, and the New Zealand dollar. And then traders looking for less volatile currencies include non-Asian currencies can look at the US dollar, GBP USD, Euro GBP. These pairs hardly move during this trading session. So now you know which pairs to look for if you want to trade this session with high volatility, and which pair to look for if you want to trade this session with low volatility. So let's continue and check the other sessions. So pairs to trade during the London session. Remember, the London session is the session that we said is active. The best pairs to trade during the London sessions are major currency pairs. If you saw or participate in our Google Classroom, you will know which are major currency pairs and why. So you can trade GBP USD, Euro USD, USD JPY, and USD Chef. I believe there are more pairs. Maybe I didn't check them, but these are the pairs that I trade. So you can also check these pairs during the London session. This normally have the tightest spread and the highest potential profit. So during this session, the spread is low or the transaction cost is low, and there is high potential profit. So you can make a lot of money during this trading session. So let's look at the best pairs to trade during the New York session. The best forex pairs to trade during the New York sessions would be your major pairs: Euro USD, USD JPY, GBP USD, Euro JPY, GBP JPY, and USD Chef. And there are more pairs that moves during these trading sessions. These pairs will be most liquidity during the US session, especially Euro USD during the overlap. You remember I said when one session closes, the other opens, but sometimes one session can open before the other close. We call that an overlap. Usually it happens during the London and the New York. So the New York can overlap with the London, and this will provide liquidity during. This will provide a lot of liquidity, especially for Euro USD during the overlap. So I'm sure now you understand which pairs to trade, what is a trading session, and which pair to trade on those particular on that particular trading sessions. So now let's continue and see what time is that trading session. Let's talk about this trading session and their opening time and their closing time. EST means Eastern Time Zone. GMT means Greenwich Mean Time Zone. So the Tokyo session or the Asian will open 9 a.m. where I am. It will open 7 p.m. Eastern Time. It will open 12 a.m. GMT. So there are different times depending on where you are. Then it will close 6 p.m. local time and close 4 a.m. Eastern Time, then 9 a.m. GMT. The London session opens 8 a.m. and closes 4 p.m. local time. Eastern Time, it opens 3 a.m. and closes 11 a.m. GMT, it opens 8 a.m. and closes 4 p.m. The New York session opens 8 a.m. and closes 5 p.m. Eastern time, it opens 8 a.m. and closes 5 p.m. GMT, it opens 1 p.m. and closes 10 p.m. So these times cover the 24 hours a day market. You can take time and you can take notes and know exactly when to look for the volatile trading sessions. So let's continue with the next topic, the types of traders. So now you know the trading sessions. Now let's learn about types of traders. There are 4 forex traders types. Oh, there's more. I only know of these 4 though. We have a scalper, we have a day trader, we have a swing trader, we have a position trader. These are the 4 types of traders that I know. Let's talk about the scalper or scalping. Scalping is a trading style that specializes in profit of small price changes. So scalpers take profit small. They trade each and every move. They take profit from each and every move that the market makes. Scalping requires a trader to have a strict exit strategy because one large loss can eliminate the many small gains the trader worked to obtain. So as I said, scalping is taking small profits each and every move. You're just taking profit. If you don't have a proper exit strategy, one large loss can wipe out all the small gains that you were making throughout your trading day. Scalpers hold trades for few minutes. They don't stay in trades for a long time. So a scalper takes trade fast. They go in and out. Then let's talk about swing trading. This one, swing trading. Swing trading is a trading strategy in financial market where a tradable asset is held for one or more days in effort to profit from price changes or swing. So unlike scalpers, they take profit faster. Swing traders, they can stay in one trade for days or weeks, sometimes even months. So they don't mind holding one trade for a long time, other than scalpers. Scalpers, they get in now, within few minutes they exit. So these two traders are different, and it also depends on what kind of a person you are and what style do you prefer. Now let's talk about the position trader. A position trader buys an investment for the long term in expectation that it will appreciate in value. So this one, they buy things for a long, they buy currencies or investment for a long time, and they expect that those currencies will appreciate in value. These types of trader is less concerned with short-term fluctuation in price and the news, unless they alter the trader's long-term view of the position. So this person only worries about the market or their trades when the news are announcing that the pair can change direction or something. So if they bought here and they were holding, if the news are announced here, that's the only time they can think about closing their position. But other than that, they can just hold on to their position until it goes up. So let's talk about a day trader. Day trader refers to the market operator who participates in day trading. So this person is not a swing trader, is not a position trader, is not a scalper, is a day trader. They open trades today they don't go to bed with those active trades. If that trade is in profit late, they close it. If it's not in profit, they also close it. A day trader buys and sells financial currencies within the same trading day, which means all the positions that he created are closed on the same day. So a day trader never goes to sleep with active trades, unlike the position trader and the swing trader. They hold trades for a long time and they don't mind going to bed with active trades. So a day trader closes their trades faster. So I hope you understand these types of traders and you have learned about the trading sessions. You understand the trading sessions, the pairs. Please participate in our Google Classroom where we post deep knowledge about this, more information, because I always say we can't cover everything in the video. It would be too long. So most of the notes are in our Google Classroom. So thank you for being part of this course. Let's meet on our next lesson.